The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, level, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
Well, as we said, oh, there it is. As we said yesterday, I thought that within the next 6.5 trading hours or 24 hours of a regular day that we'd come down and see 2750 on the S&P cash. Now, what I was hoping to see was a lot of volume, a lot of people getting all hot and bothered, and some kind of exhaustion move in the market. What we have had almost all day long are pullback or down moves, and then 5 minutes of volume up, and then 25 minutes of nothing, and then the next leg back down in the market. So what I've been looking for is something in the way of a change in that pattern today. I have not seen it. That is, we continue to see all these big pushes. They have a lot of thunder and lightning for a handful of seconds, and then you go back into a market that literally is just gasping for breath. Right now, as we start to show, if we look at the CBO, all the equities, that's about 3.7 billion shares right now with 2 hours to go. Yesterday, 7 billion shares. So we'll see how the end of it brings up. But we also have just 1.6 billion shares, 1.65 billion shares in the just in the NYSE consolidated tape. Now, that does mean we came down on light volume, but every rally is on even lighter volume. And as we said, a lot of times people don't believe that there's a short-term top end, but even rarer people that can believe that maybe a medium-term top is in. I would not be surprised to see one more test of the low of the day before we go home. Now, maybe that sees the kind of volume and increase that makes me think that the weakest hands are out. But right now, I see nothing, no fear, no culmination of a move. I just see people that are down here buying levels in an incredibly, and I mean incredibly thin market. So we'll see what happens. But I would not be surprised to see a gap tomorrow, and that gap being downsized or down until we get some kind of sign that we've hit a nerve. And my guess is, or at least from what I've seen now, is that we haven't hit any nerves. There's nobody doing anything other than buying slightly lower levels every time we get to them throughout today and kind of into yesterday's close too. So, you know, unless I see something kind of different that's a signal that maybe someone's willing to say uncle and throw the baby out with the bathwater, you know, could we go back up to 2,800? It certainly could. I just don't see anything out here that says, you know, that this thing is done. I see a lot of people that want to buy every pullback. Those pullbacks have all been negated within 30 minutes or an hour. So we'll see how the last hour of the show or last hour of the day comes on. But if we close somewhere around 2750, generally the pattern in these days is the next day to gap down. So other than the fact that I had a put that I didn't think was ever going to get there and got out of it today, down to like a nickel or something. So not going to scream about that. The rest of it is how badly everybody wants to buy these tiny little moves back down. And normally what you see is kind of a big move out. So we'll see. I've got a lot of puts. Most of them have gone into the money today. Most of them are that I bought personally, not the ones in the newsletter, in the money. I got one in the money here today in the newsletter. But those newsletter ones, guess what? I've got to have some depth to go into those. I can't, find a stock that's got 20 at a strike price, 20 for outstanding, and get people in the newsletters in it. So a lot of my individual trades, not in the newsletter, my personal ones are fairly thin for outstanding or actual volume, not volume, actual, what I'm trying to say, just outstanding options at the moment. But we shall see. And I already have a question of whether or not I'm still sitting on my hands on my ES short, and the answer is yes. I see, like I said, nothing here that tells me that this is over. I just see people keep buying. And this isn't one that's easy where the volume comes in and everybody is scared out and it's over. These are the kind of light volume tops that can be very scary in the fact that no one's expecting them and the volume never really picks up, but you get it's kind of the opposite of a rogue wave where you get hit with something real big for a minute. These are the kind that sit here, and I almost call them paper cuts and paper cut markets. I've heard that term before, where you get a paper cut and it stings. You're not going to die from it, but what does it do? It never quits bleeding. It just bleeds on and on, just a little bit all the time. So you want to keep an eye on that. My expiry dates are all for Friday. So that's this just looks to me like a pullback and a uptrend at the moment. But one of the things you have to worry about is this kind of action, which is nobody believes that a top can be in. Nobody that I really know of is talking about it other than people that have always been bearish, people that are always been bullish, and there's nothing you can do to change their mind. Just think that we should buy every one of these pullbacks. What I see is a lot of people that just can't wait to buy everything in a market that's incredibly thin, and we should have seen all kinds of volume come in off this, what was it, 2748 low? Is that what it was? I think that's what it was when I was looking earlier. 2746 on the S&P cash was the low. So I'm more than willing to sit on my hands. If we open up with a gap down, I think we're going to have a lot of flushes. Kind of halftime at the Super Bowl kind of flushes. Tidy Bowl kind of flushes. But anyway, like I said, I'm seeing a lot of people trying to push these things. There's not a lot of volume on the way down. There's just less volume on the way up. And those tend to be some of the most devious pullbacks that you can see in the market. We're off almost 10 points in the S&P cash. We're up 5.5 points on the NASDAQ, down 155 on the Dow. Russell was off half a point.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back and had some emails in here. We'll get to the rest of them. But one of the questions was what it was I looking for. And where is it at here? Did I go by it? Yeah, I did. Do we have somebody on the line? Huh. Sounded like an echo. Where's it at here? Okay. If you want this, a lot of what I'm doing is based on the original guy that did price and volume trading. His name was James Wyckoff, W-Y-C-K-O-F-F. If you want a list of all the terms, I can give you a link here to it. Just email me at path@tfnn.com. But one of the things he talks about, or the way he thought about it, was a selling climax, a situation characterized by the high intensity of speculative supply occurring within a downtrend. The situation occurs only after a move has been in effect for some time. This condition marks the end or approaching end of a particular downtrend. The panic creates an extreme expansion of the price spread and expansion of the volume. This action may occur over one day or several days. If it does, if it does not have this, it's not a selling climax. The Wyckoff principle of selling the climax does not always occur at the end of every decline. That of the ST or the SC is the down or the down move. But I think everybody understands that terminology, but he used to put it on his charts and stuff. Interesting ideas about how he traded and what he did. But I always like the idea of seeing that, and almost always I've seen that. It's been rare that I have not. And as I said, you know, maybe we see it here and then the close. We're off a little, 10, 11 points on the S&P cash. But again, we bounced, what, about 7 points higher than we were right now, maybe 8 points on the S&P cash. And one of the questions always is, why do I always talk about the S&P cash? Well, because the futures are easily moved around, at least in the short term. And you got to move 500 stocks with real money. So I don't spend a lot of time on after the bell and overnight kind of things. I like to know what real money in the equities do. I know that you can make money doing that. But for me, the idea of being able to tell what's going on is much more about what the reality is of moving 500 stocks by putting real cash against it, and the occasional, self-serving analyst upgrade or downgrade, all the other kind of stuff that comes along with it. But even over a couple of days, it takes a lot of cash to manipulate a market. You can do that in the futures pre-market. What were we up? We were up 10, 15 points at one time when I saw earlier this morning. Again, that doesn't mean a lot to me other than if I become an insomniac and stay up all night and trade. For me, I'd rather see signals that I know that are probably a little bit more firm than the whispers and what would you call it? Just the echoes of the trading day before in a very thin market. Anyway, we're at 27.55. Let's do a little history, and then we'll get into some charts. Know what?
It's all just a little bit of history repeating.
I don't know what means. Anyway, on this day in 1879, Albert Einstein is born, the son of a Jewish electrical engineer in Ulm, Germany. Einstein's theory of special and general relativity drastically alters man's view of the universe, and his work in particle and energy theory helped to make possible quantum mechanics and ultimately the atomic bomb. And of course, most people see that and they go, special and general relativity. And most people don't know who actually came up with the first theory of relativity, not the special, not the general, but the guy that actually came up with the first idea of relativity. We'll talk about that later. Maybe I'll bring it back up. I will give you a hint. It has to do with telescopes. Okay, what else do we have? Oh, there's only one side of the market. It's not the bull side or the bear side, but the right side. Okay. Let's go ahead and start looking at some charts, and you can give me a call at 877-927-6648. Of course, the big news is Boeing, which makes the best planes in the world. But it's coming back and testing this previous 317.39 low from February 5th, 319.25 from February 9th. Both of those 8 million and 10 million. So you're looking for something like that. You spiked down to 322 today, so still a couple bucks above that, but you already have about 10 million shares. So you're going to need to get back into this 320 level again. Now, does this happen next week in the FOMC? Okay, TFNN Studio. Know what? I hate it when people put messages and you have to think about what happened over the last 5 minutes. And know what? Know this, know that. Anyway. So what we have in the market, we're just going to sit here and watch this here. Let's take a look at the volume real quick before I get back to Boeing. Again, if you want anything that I talk about, any of these links, just email me at path@tfnn.com. Be glad to send it you. Okay. Okay. Anyway, Boeing, kind of the big one out here, and that was why the Dow was down earlier in the day. Oh, okay. Thank you. Okay. I don't know if there's anything else to say here. You got into that. You kind of reversed out of it. But my guess is that you're going to come back and test that 320 level, and you need to before you look at Boeing again. Of course, the poster child for what China will do if it doesn't get its way. But I never thought that China was buying all those planes anyway. I just thought it was a negotiation, as all things are with the Chinese and the Chinese Communist government. Although, is it a dictator now? I mean, it's kind of like Stalin without all the deaths. But he is kind of the supreme leader for all time. So is it a dictatorship or is it communist? I mean, they kind of gave up the communist way, but they're still a communist party. A conundrum, but I don't know. Anyway, as always, give me a call at 877-927-6648. So now the thing that's unexplained to me is the TLT. We got a bounce. Wasn't thinking we were going to get anything close to this bounce. Volume continues to be light. We'll talk more about this when we come back. 6 million shares compared to the down day of 16 million shares of the February 7th. So I'll give you a little idea what we're going into with the TLT.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're watching this market, 2756. Volume remains light, both on the upside and the downside. We're still under 4 billion shares on the U.S. equities market volume summary from the CBOE. If we look at the consolidated New York Stock Exchange volume, 1.8 billion shares with an hour and a half to go. So about as bad as the volume was up, the volume is down. Again, I'm looking for some kind of big move in the volume to say that this week's downtrend is over. If we don't see something today, a lot of times what you see is a gap down, and that gap down may or may not get the kind of volume you need. If you start seeing a lot of volume, then generally you've found some kind of tradable bottom. Right now, we're still off, 8 or 9 points on the S&P cash. Okay. What else do we have? Question about Qualcomm. As we said about 8 days ago, maybe, I think 8 days ago, maybe 7 days ago, this deal was done. It was when they started actually sending people to Qualcomm's office from the president's office to let them know that there wasn't hell or high water of a way that we were going to let Qualcomm go to Broadcom and by extension go to Huawei and the Chinese to take over the version 5 of the cellular network. So what do we have out here? Well, we broke down a little bit yesterday on the big volume. Does that mean Qualcomm's worth nothing? No, you got a kind of combination of a couple of things. Actually, Qualcomm off a little bit better. And my idea would be that if Qualcomm's going to find a dancing partner, it's probably going to be Intel. That would be good because it'd give them a manufacturer. But again, you've got to kind of keep an eye on what this is. You got a nice little doji out here around this 57.90 low. What was the high of day here today? 59.90. So around 60 bucks. But again, I'm not a big fan of jumping in right now. I see a lot of stuff going on, but nobody really putting anything out here that makes me look like we've got some kind of tradable low. Now, this is options expiration week. We did get to the 27.50 area. I just think that maybe we've got one or more 2 times down. And the question is whether or not we just make a big jump in the morning to the downside before this market can turn around. But no scares so far, no real panic, no thoughts that the market could go lower. And that's always when I'm keeping an eye on and where I think that the market can go lower. Everybody willing to jump into these no volume markets on every pullback also makes me nervous. I like to see people kind of give up to let me know that there's a bottom, and we don't have that yet. One of the other things going on out here has been that Tesla's been able to run just about every options expiration move for a year with the super high short interest in it. Today, we're still kind of in this level around 340, but the push of the 12th, where you had some decent volume on the upside, 8.3 million shares, was basically negated over the next 2 days. And, you know, of a stock, especially with the zealots that love Tesla, own Tesla, don't care if it goes to zero. They think that they're somehow, I don't know, freedom riders on the bus, the new electric bus of the 21st century. But of course, putting your money into a company means that you probably ought to think that the stock is at least going to pay you dividends or go higher. I don't understand the idea of throwing money at a company because you like its political purpose. But what do you have? This thing ran on very dubious news on the 12th, which was that we found out that they'd closed all the plants for a week to try to get all the bugs out of the production, get the production back up to what it was. I don't know why that would be good news. other than the fact that maybe it actually fixes some of these issues. Did you need a whole week? Why not 3 days? Why not 2 days? Why not 4 weeks? Those are the kind of questions I'd actually love to see inside the company, but we really don't get answers to those. So we'll keep an eye on it. What else do we have going on out here? As we said a few weeks ago, we were long this stock. We took the easy money out of it. This was a stock that was being shorted. Some days, 60% of all shares were being shorted. This pretty much where this ABC is kind of taking us now. So I think we're probably, let's do the expansion on this and see where it is. That goes to 129. Now you got a little bit more left on the bill, but you're getting a few of these stocks making new highs, but these things all have massive short sales on them. VeriSign is this one. It's gone through the 121.61 high of February 16th that had 2.4 million shares today, with 1.4 million shares so far. And again, we're watching for a lot of these that have done this have just pulled right back into the trading range. So they haven't done that much more. Okay, let's take a look at a few others out here. Let's take a quick look at Intel, INTC. Written off by everybody, not by me. I'm willing to hear any kind of mea culpa about all the different so-called flaws in their chips when this thing was down around 42, and kind of knowing that everybody was just kind of blowing, especially I guess the less you know, or the farther you're away from home, the more you're willing to blow about something you know nothing about. You got 53.78. You got a little bit of a reversal out here. Support comes in at about $50.85 in the market pullback that I think can come over the next couple of days. This might get back down to the $50 level, but you couldn't really tell today. No volume doji on this one. We're going to the break. Let's see what else we have in the email thing. Question about the V&Q. We talked about this one for a while. This one was the one that gave us the heads up in February that something was up rotten in Denmark, or really rotten in the bond market. This thing broke that $80 level, then fell like a bad souffle in the Brady Bunch or other bad sitcom from the 1970s. Fell all the way to 72.05. It's been kind of coming up here. You got kind of a little move out here to the side. But again, my guess is if we're headed lower, we're probably going to see this one continue back down, probably starting tomorrow. So keep a close eye on this one. I don't trade it, but it is a good indication of how these REITs are trading. VNQ, the Vanguard REIT ETF. Give me a call, 877-927-6600.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, surprise, surprise, we're back down here testing the lows again. And it's amazing how volume can tell you, just like ticks and other things, that there's something going on at a price level. Again, we were down to 2746. We're 3 points above that in the S&P cash. So look at that level on the cash, 2746.08. We're going to test that, I suspect, here fairly quickly. Probably in the next 5 to 10 minutes, and then we'll see whether there's anything going on. Volume just now starting to pick up, 1.9 billion shares on the NYSE consolidated tape. If we look at the CBOE volume, just a little over 4 billion. So not a big volume day, but again, we started higher. I would have loved to see, a blowout and all the volume come in and know that I could go ahead and take my positions off instead of letting them have to run kind of into Friday's expiration. But I got several positions that aren't expiring on Friday, so we'll see how this goes. In fact, went for one of the big ETFs out there with that 3X on it, and it's doing well. Okay, so what else do we have? We were looking at Tesla. It's off 11, 12 points. See if there's anything else out here that makes me want to scratch my head. Question about CYBR. CYBR from Johnny. Is that Modesto? I think it's Modesto, California. CyberArk. Now, this is a good chart to look at today. You're basically getting into the resistance level in CyberArk that goes back to May 12th of 2017. What did we see that day? 5.7 million shares on the way down. And, of course, as you get into this gap, yesterday we had 515,000 shares. Today, and 460,000 so far. So, again, you're pretty much at the point of maximum resistance in some of these. But this is still... This computer security software sector is still the strongest sector, I suspect, in all of the markets right now. Another question to take a quick look at the IBB from Ronnie in Orlando. Thank you, Ronnie. He says he's a new tiger listening here. What do we have in the IBB? This just doesn't have a lot of juice either up or down, but did have a little bit more from this March 2nd low where it retested this 105 level and then went back up. But you just don't have a lot of, you got basically a 10% move in the cash, in the cash of the IBB. You're kind of pulling back here. But again, fairly light volume. I would suspect this thing goes back to 110 if we continue to blow out these lows, which I guess we just did. We're off 20 now in the S&P cash. So we'll see. Hopefully my ticker is not trailing today. I saw somebody in the den talk about it. But not uncommon to see dubious errors in the ticker in high volume. But I've seen it in low volume too, and I always wonder about that. There's no reason that we should be out running the tickers today on the kind of volume we have. So I got another question up here. We looked at this. Didn't quite make, if I was going to short this, question is what I have shorted it. I would have said you'd had to get to 117, this gap down on the 30th of January. I still wouldn't probably have shorted it. I think, let me put it this way, I like that it did have more energy off this March 2nd low. So this would be the one that I'm looking at in a pullback that comes back. So the question I'm getting now is, where do I think this could go because of options? Well, options have been saying somewhere between 2680 and 2700. So could we just see this for the next 3 days? Well, I think if we don't get any kind of volume and everybody just keeps whistling past the graveyard and there is no selling climax or anybody getting excited, I don't think we'd have any problem hitting 2700. As I said before, this setup, when it's extremely bearish, starts with a gap down tomorrow. So I think whatever happens today, as long as it's not a massive 40-point rally in the S&P, probably, and we get a gap down tomorrow, I suspect that sets up some kind of medium-term move. And looking at the FOMC meeting for next week, Tuesdays and Wednesdays, I'm wondering if we are not, I saw a ton of stocks this week go to previous highs on extremely light volume, run all the shorts on nothing, and then reverse. In fact, there's one that I wanted to get, I wasn't able to get. Did we bring it up on the show? I think it was URI. Maybe I did, maybe I didn't. Liked this thing. This thing ran up on to 190.74, and I wasn't able, by the time that I'd taken the 2 minutes to write the order to go out to our subscribers on it, this thing had already turned around and set sail south in a hurry. 189, which is the January 25th high at 3.1 million shares. We spiked into it with 900,000 shares. So 1/3 the volume. Energy off this February 9th low was not all that exciting. And again, this is starting to set up like a medium term. So could we kind of go sideways or lower? Not a whole lot. I don't think we're going to, again, I'm not thinking the wheels fall off the wagon. But could we have set a high maybe between now and September? I think the answer is yes, and it certainly looks like we have some weakness out here. We've talked about how this market does tend to kind of look like 2000, where there was a lot of reason to hold on to your stocks, i.e. in now. Then it was because of taxes. And guess what today? It's because of taxes. So a little different. There wasn't just one day where everything was going to change for you as an investor, but there's a lot of people still wanting to go after these things. But no energy from 156.01 up to 190, or let me put it this way, less energy than the move from 189 down to that 156, and no volume, actually 1/3 of the volume when you reach the highs. And I think that tells you everything you need to know. Don't see the wagon just falling off, the Indians circling, and kind of a bad night out on the prairie. Oh boy, doesn't that sound like a good book title? Bad Night Out on the Prairie. or as my dad used to say about Tonto when they were surrounded. I don't know if I can even say it anymore. Question about Twitter, TWTR. But I will say, what is this "we" stuff? That was Tonto to the Lone Ranger when they were surrounded. Twitter on the top here. Again, one of these stocks with huge shorts in it. I think it's trying to blow people off the wrong way. We'll talk about this more when we come back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. So on Twitter, I'd be a seller right here. Everything I see says that the market could easily go test 2,700 by Friday. And, you know, if it doesn't, it's probably going to do it next week. So I'm more than willing to sit on some fairly heavily leveraged positions. As I've said for the last 4 or 5 days, that I was a fan of buying out of the money puts. Those out of the money puts have kind of got into the cash position today, but I just don't see anything here. And of course, the other thing which people are asking about is what do options actually say? And they basically say the same thing. We could easily get back down to the 2,700 level on the S&P cash. The SPYs actually are showing like 27 or 271. So what did we close at? 276.72 last night. Does that mean you're going there exactly? No. They'll sell additional puts, which will kind of move this number up a little bit. But could we see another 40 points down? You know, and then maybe bounce 20 points or something before Friday? Or even 40 points on Friday? I think the answer is yes. We could see some kind of huge washout and a recovery. But my guess is that that's going to be on Friday. As we've said before, this is a not just a regular options. This is a triple witching. So we have futures expiring at 9:35 on Friday and options at the end of the day. So we could see kind of a much different market Friday morning than we see at the close of Friday. So we'll keep an eye on this. But my guess is we have not seen the low just yet. Watch for gaps in the morning because those could really accelerate the downside. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.